All right, so welcome back to our next video. So we're going to pick off from where we left off in the previous one. So we're going to look at the account. Um, so like I said, this is a 100K FTMO funded account. I'm using a swing account, and so currently have a few trades open. You can see the P&L here. It's actually dropping quite fast. I think like not even like an hour or 2 hour ago, I was at like 800. Then slowly went down to now 150, 120, 104. So that's that. But anyways, you can see though we like I mentioned, um, we started at 100K. We went all the way down to 95. Was able to run it back up. Then it dropped again. Run it back up. Now it's dropping again a half. So we are making improvements. Um, most of these huge drops starting from here is due to really bad risk management. The first 5K was basically Friday trades and Monday trades. So if you've been trading for a while, you know that Friday is usually not a good time for me to trade. Um, I just think the volatility just drops. And then Monday, it's kind of like this. It's kind of like the same thing. Volatility, or the market reverse kind of deal. There's no like continuation. So that was yeah. Um, so we're making some progress. I mean, at the end of the week, at the end of the day or at the end of the week, as long as I'm not going below this level, this 90, 97. I'm fine with that. It's really like if you go like below that low, that for me it's not like good news. So for now, I don't mind that much. Ba, 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 ba. So yeah, so like I said, Friday, very bad trade. Monday, very bad trade. Um, Mostly risk management, really bad risk management. Last video we covered 1.5 day. So now we're going to cover this one on Wednesday. So Wednesday, what do we have? We have silver, Australian dollar, New Zealand dollar, and S&P. All right, so let's bring silver up. What time was it? Da-da-da-da. December 10. Okay. So that's a preview of the trade. So let's run it to MT4 and see what happened there. So going to switch view, silver. So we were talking about the 10th, right? Okay. All right. So the 10th, the 10th, the 10th. All right. So that's probably this one, this trade right here. Okay, so let's do a bit of recap on this trade. Um, all right, so you have the Asian session, then you have the London session, and then you have the New York. So, all right, so price dropped from the Asian session and the London session. So took out all the stop loss here. Gonna zoom in a bit, maybe zoom in a little bit. No, too far back. Is it this one? No. All right, this one. Perfect. All right. So you have the Asian session, you get the London session, and now we have the New York. So yeah, so basically price drop below both of these sessions. So it took out a bunch of like stop loss and all that. So I put in a trade. You can see with the Fibonacci tool. So I risk 1 unit for 2 units reward. Mind you that I don't use a fixed stop loss. Simply because I risk 0.25% on a trade. So this is a 100K account, so I risk like 250. And the first stop loss is at 250, but I'm willing to go up to 2 risk, so 500, and the reward is 500. So it's either 1 to 2 or 2 to 2 or like 1 to 1. And the reason being is because I found that when I use a 1 to 2 risk reward, it does hit the stop loss and then it reverses back again. So if I use a 1 to 2 or like 2 to 1, it's just easier to say. If I do a 2 to 1, I know that if it touches the maximum risk that I'm willing to take, so 2 units. So it could have been like all the way here, for example. Then I know I should be closing this trade. So if you look at here, using the 2 to 1, 2 reward, 1 risk, we look at here and it did touch the stop loss, but it reversed right away after that. So using another like level 2 a stop loss here would actually prevent it from touching our hard stop loss or fixed stop loss. So now we got to think about, okay, well, if you're using a 2 to 1 or 2 or 1 to 1, like if I'm risking 2 units to get 2 reward, is it profitable? I didn't run the stats on that, but I do think it occurs less. There's less occurrence of price hitting a stop loss on a 1 to 1. So on here, so there's less occurrence where the price actually hit our, the maximum risk that I'm willing to take versus the risk that I'm taking here. So I think overall, when you like, I think overall the odds are still in my favor. I haven't tested it. I haven't went, I don't have enough data to, to cover either 2-1 or 1-1. But from when I look at the market, I always find that even if you take that like that first low, which like, takes out all the stop loss from the Asian and the London range, I find I found it that it's very frequent that it will hit the stop loss again and then revert back, or hit a little like lower again and then revert back, just to make sure that it really takes out, um, you know, uh, all the players. So that's why I use a 1 to, or like a 2-1 or a 1-1. So I either risk 250 for 500 or I risk 500 for 500. In all case, I stay in a positive. If I risk 3 units, if I risk 3 units to make 2 units in reward, now we're negative. So I don't think in the long run it helps. I think it's better to cut your losses at the 1-1, so risking 2 units here, and then re-enter for on the next setup. Mathematically, like I think that makes more sense than doing allowing for risking 3 for reward 2. Don't think that makes sense. So that was the silver trade. I'm just gonna pull this up again. All right, so that was a silver trade. Let's go with the Australian. So Australian. What was the play here? All right. Okay. So when was the trade taken? December 10th as well. Okay. So then Australian, let's go back to Australian here. What was the play? On the 10. 10, 10, 10. So right here. All right. So, all right. So here, what do we have? We have our Asian range here. We have the London session. Then we have our New York here. Maybe I could zoom in a little bit. All right. So we have our Asian session. We have our London session here. We have our New York. So on the New York, where did I enter? I entered here with the stop loss here, and you can see that was the wrong stop loss. The correct stop loss would have been here. So this is a case of now we're risking 2 units with the 2 units reward. So that's what I mean, that sometimes, I see it often that, you know, I think that this is a good uh confirmation level. Oh, hold on. Let me I'm trying to see if I can add this one. And if I use this, why is it not showing? What the hell? If I use this here, will it show? It's not showing. Trying to. Maybe it's this. Ah, there we go. And if I do this here, or if I do here, no, it's not the right. Ah, there you go. So if I use this like here, all right. So this seems good. Okay, so I'm gonna erase this. All right. So my bad. Okay, so we have our entry here. Hold on. Just gonna move this. Let's move it here. All right. So maybe change color. All right. So we have our entry here. We put our stop loss here, and like I said, a lot of times when I when I think that this is a good a good point for entry, it actually runs up and it goes again and it retests for another stop loss here. And you can see that it matches the Asian low here as well. So this entry here was the wrong one, should have entered here. But if you look at the ratio itself, it's a 2-to-1 or a 1-to-1. So I'm risking 1 unit here, and then I'm risking another unit here. So that's 2 units. And that goes to 2 units risk reward here. So we got 2, my bad. We got 2, and then we got 1 unit, and then we got 1 unit. So like I said, it repeats that pattern that I see quite often, is that the initial like first stop loss that I think is good, it actually goes and goes even like one more. Try to take like the Asian lows here, like previous session, and then shoots right back up. So that's for the Australian dollar. That was another 500. And then what else do we have? Whoops. And then what else do we have? So we're going to go back. We covered this. NZD. All right, so for New Zealand, what day was it? New Zealand, I believe it's almost the same setup, simply because the Australian and New Zealand are very close together. I find that they're quite correlated. So let's go to our NZD. And we'll go for December 10. All right, NZD, December, damn. All right, NZD, December 10. I don't have the screenshot for it. Maybe I changed a template on my chart and the trades disappear, but they're clearly there, and I'm pretty sure it's the same setup. Pretty sure. If I look at the timing, December 10 at 9 p.m. And then if I look at AUD USD, that's a close time. So close time is at 9, and then close time is at 9 with 3-second difference. So it's basically the same setup. And you can see from the chart here, you know, it's not exactly correlated, but you can see the drop here slowly moving up and then the boost. And then you see kind of like the drop-ish and slowly moving up and then the boost. So that's for the NZD right here. And then we made a small trade on the US 500. US 500, we made a small trade. Let's see what that trade was. We're gonna So that was December 10. Let's see. So we're going to go back here. What? Why is it not allowing me to go back? Oh my God. Okay. All right, so December 10. I don't have the screenshot for it. Let's see from FTMO what they say. So it was at 220. We ran it all the way down here for 1230. 219, 1230. Okay. So if we go back here and we find so it must have been around here. 2-ish around here. It must have been around here on this candle here. And then, so we're going to clear that. I think it must have been around here to get it at 12 something ish here. If I look back at, yeah, because then after that, it goes in range before that boost. So if you look here, I'm gonna redraw this. So from here to here, and then it goes in range before that boost. So I think that was the setup. Um, why did I take this trade? Very good question. Let's see if I can. So I took the trade here and went all the way there. Oh, probably because I saw, I believe there would be a continuation from that low here. And that's probably why because it was the Asia range and the Asian was going to drop. I felt like it was going to drop. So that's why I took it. So mm, that's one trade that I can't really explain. So I guess I got lucky on that one that I was able to make 250 on it. All right. So if we go back here, what other trades did we have? So we covered this, this, this. Those are small. So yeah, so that's pretty much it for Wednesday on the 10th here for the for a pretty big day, pretty big day. So that allowed me, so if we go on the 10 here, this allowed me to go to build it back up, slowly build it back up. And now our floating trades are basically at zero. So it's kind of harsh because like not even 2 hours ago, maybe three, I was at like plus 800. Then slowly went down to 7, 6, 5, 4. But to me, it doesn't matter that much. I mean, overall, when you look at it, I was at my lowest at 95, then 97, and then we're going to go at 90, 98.6. So I'm assuming the next low will be around 100. So to me, that seems pretty acceptable. Um, as long as it's going up, and that's another reason why I'm doing these videos. It's honestly more for a personal like accountability because even though I publish it and I make it you know I don't mind people watching good and bad trades, right? And trades that, like I said, I don't know why I really took them because it didn't really fit ideal trades, but I still take them, and that's why my chart is doing a roller coaster. Overall, it's still kind of good. Um, but yeah, so definitely need to work on some need to work on some discipline. Because that last 250 on the US 500 was seemed to be a lucky seemed to be a lucky trade. So today's per minute loss 3K, so that's I'm not too worried. And yeah, so next video we'll cover Thursday, the December 11. Um, yeah, I think that's it for now. Oh, we made another we made for $50. No, but what I wanted to say is that that's the reason why I risk only 0.25%. A lot of the folks on YouTube will say, risk 1% or risk 0.5. But if you risk 1%, yes, you'll pass the challenge faster, but you only get to lose 10 trades, right? And the winning, like a realistic winning rate is just above or below 50%. So it's between like 30% and like 53%. So if the winning rate is between 33 and 53%, let's say 55 to round it up, the odds are not in your favor. So if you're doing a 10%, so if you're doing a 1% trade and you only have like 10 trades, um, you don't know how many losses you will have in a row and how many wins you will have in a row. So we can have 7 losses in a row and then one winning trade. So if you have 7 losses, you're at minus 7K, and then you have one winning trade, right? So one winning trade, two risks, so you're at 93. Now you're at 95. And then what happens if you lose like another 3 trades in a row? So now you're at 92 because you lost 3K. And you basically need to have your next like 2 winning trades like winners. Like you basically need to have your next 2 trades winners, which doesn't really give you room for error, especially when you're really low on the account. So especially when you're at like minus 8% or more in drawdown, you're not going to trade the same way as if you were like minus 2% like I am right now. So right now I'm at 98.6, so that's like 1.5%. That's why I don't really care. Because if you look at the trades before, I went from 95 to 10 to 100, so that was 5K. And then I went from 97 to 100, so that's 3K. So I know I can make it back. It's not that much of a deal. Whereas if I had used a 1% trade, I would have been blown out here and I would have lost right here as well. Possibly here would have been close because I'm at minus 1.5, I'm at 0.25%. So if I multiply this by 4, so that's 6. So I would have been at 94K right here instead of 98. So 94K, that's minus 6%. You're threading really close to minus 8%. So minus or at 92. So 94 and 92, it's like when you go below the 95, it gets really difficult. Like psychologically, it's tough to build it back up. So that's the reason why I rarely use 0.5% risk on a trade. I only use 0.25 like 90% of the time. And it's also because I use, like I mentioned on the other trade, I also use the, uh, like the game plan is 2-to-1 reward to risk. So, or risk 1-to-2. So risk 1 unit, reward 2. But as I mentioned and as I showed like in my charts, quite often the price will hit a second level of risk to really like take out all the stop loss before the price moves back again. So it could be, um, maybe it's because my stop loss are too tight. Um, that could be. Or it's kind of like a behavior like in the market to, just retouch the stop loss one more time, clear everything out before it goes again. So that's why, with the way that I trade, I was able to recover. So, anyways, that's just my observation. We'll see with time if I change and if I put wider stop loss. But for now, you know, it's been, like if you remove this, if you remove the minus 5K here, because that was Friday trades and Monday trades, and that was completely, these were trades that were not, I should have never taken. You would see that, I would be like in a positive of like almost 4K from 95 to 98.6, almost 4K, so almost 4%. So it's not too bad. So, anyways, hopefully that won't go too much in negative, but guess we'll see on the next video.